Really nice gains this month in the 25K, 50K portfolio. It's been about 5 days in a row hitting new equity peaks. And you can see it can do that sometimes for a while. I'm going to go over the drawdown curve in a little bit. We're at a current drawdown at 0. It's happened 5 days in a row. It's 10 strategies, up 11,765. And so back here, we went through a tough time, I guess, in May. It was a losing month, and then a lot of June, not a lot happened, and then at the end of June it started doing well again. And so you can go through drawdown periods where not much is happening. You're going through a drawdown, and you see here June 23rd, 2020, you're kind of stuck in this $6,000 drawdown, and steeper than that before that. So you're in this drawdown of about 7,000 back here, and it's not bouncing very quickly, and then all of a sudden it bounces, and then it takes out equity peaks for a while. But I want to go over the trades, and we'll come back to the drawdown curve, talk more about timing it. We have just got a fill in gap continuation 2019, but not 2020, so that's what the order filled was. But gap continuation 2020 and 2019 have been really good performers this month. Yesterday, up about 1,000. Let's go back here. It was a losing trade here, and you see it was up 2,000 last week, and then another trade was up 2160. So a lot of the gains, about half the gains for this portfolio have been in gap continuation 2020 NQ. Some of the recent trades, Cobra 3 has had a decent 2 out of the last 3 trades have been good. Haven't had any huge winners in Cobra 3 lately. Night Trader has been good. SR Counter Trend 2 E-mini S&P has done really well. Buying those pullbacks, you have to buy them and trade what's working until it stops working. And sometimes when a strategy stops working, that's when the give back happens. But you have to be have the tenacity to keep trading what's working until it stops and get that run up so you can endure the drawdown. And Cobra CT3, it had a good trade back here, really catching the low on that trade. This is one of those that if you're trading the micros, it placed a limit order at that low on the next bar, and the ES traded at that low, but the micro did not. And so that's one of the things that I've been looking at, is revising this strategy so that it wouldn't be missed based on a limit order at the low, maybe a market order. And so I'm constantly looking at better ways to do that. You don't want to be missing things based on a tick, but you want to make sure that it works too. So you have to back test it and make sure you're not optimizing and all that. So those are some of the highlights. Those are some of the trades on the month. And let's take a look at the drawdown curve cycle again. So got another profit, had a profit target and 60-minute breakout in the ENQ. Really just insane rallies in this market, way beyond anything we would have expected. But let's look at the cycle of drawdowns. So we talk about when to get in and when to get out. We talk about getting in on a drawdown. That's intuitive. You can do that, but systematically you don't want to start and stop because you don't know. You get in time periods where this thing just runs up. You see how thick it is on the drawdown curve, how it runs up and it hardly ever pulls back. Just quick pullbacks, not very steep, maybe $3,000 here. $3,000 can be fairly frequent. Historically speaking, $5,000. If you're waiting for a $5,000 drawdown, you might not get one for 2 years. If you're waiting for a $5,000 drawdown, you might not get a $2,000 or $3,000 drawdown for 2 or 3 months. And so you could miss a 10 to 20K run up waiting for a $5,000 drawdown. Now we've had more volatility this year, so you see the equity curve or the drawdown curve expanding a little bit, but it's still maintained its worst case drawdown. So that's very good. And we could, if volatility continues to expand, see deeper, more frequent drawdowns. Or if volatility shrinks, we could just have this narrow drawdown curve where it just runs up. It doesn't pull back as much. And so we can't predict the future. This is just an analysis of how to time your entry into a portfolio and to take these things into consideration. If you're waiting for a pullback, you may not get one. Or if you get in, it may pull back steep as soon as you get in. Those are all things that could happen. You see in this time frame how much there were run-ups. There's very little drawdown here And in this time period, this doesn't look like a very long time period, but it's about 3 or 4 months between those where there's not any more than about $1,000 drawdown. Same thing there, same thing in there. You get 3 or 4 month periods where there's 1 to 2K drawdowns at most. And then I don't know, with this type of market, we have so much range and volatility. I'm not sure that we would see this narrow of a drawdown going forward. But we are at equity peaks 5 days in a row, so $1,000 drawdown is pretty certain and pretty frequently, but waiting for a $5,000 drawdown. And the thing is, you have to be, when these happen, they happen quickly, so you should already have the portfolio set up so that you can start trading it. If you wait for a drawdown to start trading it or to get set up, if you wait for a drawdown to get set up, the drawdown may happen, you get set up, and then while you're getting set up, in 1 to 2 or 3 days, it could run up and you miss that drawdown. So timing these drawdowns can be challenging, and just wanted to speak to that while we are on a 5 day in a row equity peak.